Hey everybody, happy Friday. Welcome to the live stream. I'm Norak, aka Wes, and I do this every Friday at 4 p.m. I am here to tell you, first of all, hashtag this is not financial advice, but also about the best investment of the decade. And that has been sugar water. Are you invested in sugar water? Sugar water has been one of the best performing assets of the last 15 years. Whether it's Pepsi or Monster energy drink, or as my personal favorite, Coca-Cola, which also Warren Buffett likes. It's one of the best investments, despite what everyone else says about EV and GME and Bitcoin. Well, Bitcoin's done a little bit better, but still, uh, that is one of the crazy things about investing is that sometimes just the most benign thing can be the best. But on a serious note, thanks for joining me. Thanks for spending your Friday afternoon. I do this every Friday at 4 p.m. I stream it to Discord, TradingView, and YouTube. And sorry to that person that sent me a message this week. I might start streaming it on your platform soon once I figure out how to do your RMTP server. So we'll see. Plug for the Discord. I just have it to have people share ideas. I'm not charged selling any services. And if you want to know my methods, here is the place to ask. This is where I come to share and answer questions and talk about opportunity. And as the thumbnail suggests, I want to address what has been on everyone's minds for basically the last 2 or 3 years, which is when's this recession coming? When is this recession coming? So that and all your questions. Hey, crypto freelancer, good to see you. And Zifiru, we'll take a look at Litecoin and all the other cryptos out there. Got a couple of other requests for what is it? Some of the old favorites that we need to revisit over the last few years. But at the top, let's look at the major things that people care about. The stock market has done something very interesting this week, finally. It's finally actually starting to show some signs of breaking above these major highs, this major level, which has defined the stock market for the last several months. This 50% retracement from the all time high that was set back in January of 2022. Remember when everything was still riding high and everyone thought that the year of 2021 where the stock market made a new all-time high every month was going to continue forever, down to the low, which was a little spike that happened right there in October of 2022. That was the CPI print for that month. And then it came up in December, same news event, December CPI, and set up this resistance, which it has been fighting for months and months and months, which is also at that 50% level, the level that I know and trust and base much of my opportunities on, which we'll look at one this week that actually made it to one of the editors' picks, the Home Depot, which I had to speak about because I read Zero Hedge every morning, and their headline was "It plunges." When I looked at it, it was down. Oh, it's down a few percent. Okay, well, tell me something that matters. But to me, that looked like a very good opportunity, and so far, it's doing pretty well. It's doing pretty well. Good little buying opportunity there for it. So those are things to talk about. And again, if you guys have something to look at, post it in the chat. I'm not going to go over too much today. I usually do this for about an hour. I've got meat on the smoker, and I don't want to overcook it. So get in your questions now. We'll take a look at what people have already started posting, and then we'll do some market recaps. Yes, I'm going to look at Palantir. Yes, well, I'm going to look at Palantir. I sigh because it is a favorite stock of a good friend of mine, and to copy trade and to show some solidarity, I own Palantir, and it has been rather disappointing over the last several years. Well, year and a half, basically. But let's go down the list here. Jim, we'll look at the things in just a second. All those things. Some of those I don't want to look at. I don't care to look at DWAC, but yeah, banks definitely we need to look at. All right, sugar water is banal, not benign. It's toxic. Here this is my favorite actually. Believe it or not. Maybe I should blur this out. Product placement, but this is sugar-free, caffeine-free Coca-Cola. why not just drink water? I ask myself. Well, water doesn't taste as good. And this I can drink before bed and it doesn't keep me up, and I enjoy it. So, am I going to give myself cancer? Perhaps. But you know what? It's not going to give me excess adipose in terms of fat from all the sugar I'll be consuming. So, I enjoy it. All right. Let's look. First person to get something was Litecoin. Got to be honest, I haven't looked at Litecoin in a long time. So, I'm going to look at this fresh. And by the way, when people ask me what I think about a symbol, I'm going to give you my honest opinion, and it may not be thing go moon soon. You know, we all are aware of the fact that crypto is in a winter cycle. And this is not the first time it's happened. It's not the second time it's happened. It's the fifth time that I've lived and traded through. And these things last for a while. And while they're ongoing, everyone's scared to buy. And if money's not flowing into cryptocurrency, it does not go up. It's just unfortunate that crypto doesn't produce anything. Yeah, it made NFTs, but you still needed people to take fiat dollars, put it into Ethereum or whatever the chain was, and buy the NFT with the money that flowed in. There's the only way a number go up is with cash inflows, and money printer is not going burr quite as much anymore, and people already bag hold and they don't want to add to it. So if you're wondering, is this going to go up? I ask you, are you buying it? Are you? Are you just sitting there waiting for somebody to tell you when it's going to go up? I mean, I'm not going to tell you to buy it, but the fact that you might be scared to buy it or add to the position is probably being smart. But anyway, Litecoin. We'll look at all the other cryptocurrencies in the same way. So the low of November to the high right here sets up the range. Very choppy price action, but I like this hold that it did at 76. There's your line in the sand. This thing needs to come up, retest the 104, and then it needs to break it. If it breaks below your 76, or if it comes up here and then rounds over and comes back down, that is not good. That is not good for you. And now, because then what it's going to do is just potentially get caught in this range, and you're just going to be continually bored. So Litecoin's probably actually doing better than a lot of the crypto that a lot of people have me look at over the last few years. I think some of the favorites like Atom is going nowhere, but more to the downside. Matic is something that I think in past live streams recently people have asked me about, and I don't know what to tell you positive about it. Number go down. Where it's going to come to, it's in what I affectionately call the valley of risk. You don't know where the low is going to be. I mean, I can draw fancy lines on here and dazzle you with, BS about, technical analysis, but what I focus on with technical analysis is finding opportunity. And opportunity happens when price gets to a level, when price does a certain volatility spike, some weird little phenomenon where a bunch of people buy it and it tries to go one direction and goes the other. Those instances set up a reason for me to come and look and take a risk-adjusted opportunity. But buying something and holding it through a losing position, well, then you need to have a fundamental bias. You need to be trading some sort of a narrative about the currency, about the project. And if that narrative is still true, then, diamond handed if you still believe in it. But something can stay depressed, a value of something can stay down for a very, very long time. And nothing you do, nothing the world says is going to change until something happens. One of the things that I think that it would be very good for people to study if they weren't trading back then is, the story of Tesla, which now that's another thing. Oh, wow, it hit 180 today. So in case you haven't been following my ideas and the live streams, we have been watching this, played this down from this 50%. I've talked about this in just about every live stream before, but really quick, played it short from this 50% and long from this 50%. That's opportunity. That's how you craft trades. But what I'm talking about and bringing Tesla into this is the trading of Tesla back around 2017 to 2019 when everyone was talking. The smartest of experts on CNBC, really wealthy people, were putting their money into selling calls, buying puts, shorting the shares, betting that Elon was going to fail. This is when Elon was sleeping at his factory. The company wasn't making any money. And then what ended up happening was they were selling their tax credits to other companies like Ford. And once that finally became common knowledge, Tesla go moon. But for the longest time, for basically almost a whole year from this rundown from 2018 to into 2019, well, it was more like 6 to 9 months. Tesla was dog crap. Nobody wanted to touch it. And then in these places, that's where people were buying those 2-3 year leap options, those crazy out of the money options that, when we got into 2020, they were posting on Wall Street Bets about, aha, look, I've turned $50,000 into several million. Well, first of all, some takeaways from that. They bought it when no one else put value on it. Second of all, it took more than overnight. It took a few years for those options to come to fruition. So take that away when you're trying to do YOLO option calls. It's not going to happen on weeklies. And it's going to be when people are not saying it's the best thing ever. In fact, they're saying it's the worst thing ever. And, to that point, I haven't really been focused on buying any cryptocurrency lately. I've had some friends tell me about projects, but the one narrative of this year that I have to keep hitting on people, making sure that people are aware of, is, of course, regional banks. Regional banks, they have been the much maligned because, all that banking FUD and things like that. And I think one of the most undervalued right now is Truist. And I'm, of course, talking my book right now. Hashtag this is not financial advice. But look at all the stuff that's going on right now. The time to buy something is, when there's blood in the streets, blah, blah, blah. But when people think it's the worst thing investment ever, that's the ironic thing. It is. It just is. And then when people think it's the best thing ever, that's the top. And when people are posting on social media about these ideas, it's usually because it's already gone up a bunch. And that is not the time to buy. So look to where people, and the reason I like Truist the most out of all these is because out of all the regional banks, basically Truist is in this weird zone where it's too big to really be a regional bank, but it's not a too big to fail bank because it's a new conglomeration of BB&T and SunTrust, relatively new. And so it's not JP Morgan, Goldman Sachs, or Morgan Stanley, Bank of America, all those companies that the federal government will, because they did in 2008, backstop. So it's in this weird area where it's not a too big to fail bank, but it also has one of the best loan to deposit ratios. It has the least amount of commercial real estate exposure of all these banks that have been severely depressed. And right now, Yahoo Finance, the dividend yield on this, and the reason I'm bringing this up is because, I like it. I want people to be aware of it. I want people to know that this is a counter narrative. The reason I talked about this after cryptocurrency, which I know a lot of people are interested in cryptocurrency, is because I want people to stop being so interested in it, realize that there's this boomer stuff that have made people money over the last several generations called stocks that represent actual companies that produce goods and services. You buy a part of that instead of whatever the cryptocurrency is. And yes, boomer stuff can still make people money. In fact, it can make someone, oh, look, it just came a little bit below 7%. A few days ago, it was over a 7% dividend yield. And to which some of my more doomer friends will say, well, inflation is it? What is CPI at right now? What's CPI at? What's the current CPI? I haven't been keeping track of it. Current CPI rate is what is the current CPI rate of inflation? I would have known this off the top of my head, I think that, oh, here we go. Bureau of Labor Statistics. So the current CPI is at 5%, all items. Okay, so you're actually beating inflation finally. Because a lot of people would have said, oh, inflation is 8%, inflation is 11%. It's just going to keep going higher. Um, Sorry, doomers, but I know that we have really high national debt. I know that there's no end in sight to the debt that the Federal Reserve has. I don't think any human being living knows the solution to it, but inflation is coming down. We are not living in the Weimar Republic. We are not Zimbabwe. Rumors of the dollar's demise, while they may come true as the world divests itself from US dollars, it's not all shaping up that way. And the problem with cryptocurrency now, the problem with anything high risk, is that you can put your money into an established company that actually earns profits, has stadiums named after it, has physical offices, has customers, and earns 7% per year on your money. That's not where we were 2 years ago when there was a 0% return in pretty much everything. So I know you guys want to talk about cryptocurrency. We're going to get back into it, but you need to realize that cryptocurrency is an asset. It is an asset class. You own something. It has a value to it, but that value is going to be what other people are willing to pay for it. These companies that are represented by stocks, they are actually generating revenue. They're actually bringing in money. They're creating wealth. And once some cryptocurrency does that, has a use case to that effect, where a business is using that cryptocurrency to either make more goods and services, make more stuff, make itself more efficient, then I'm really interested. But projects themselves, while they have great white paper potential, it's just going to be like the dot-com boom. About 90-something% of them are going to go to nothing. And so if you're holding on to these cryptocurrencies and you really believe in the project, then stick with it. But if you're making money now and you don't have an IRA, you need to do that. And I know that a lot of my young friends, my Zoomer friends, millennials, hell, even Gen X people, some just don't want anything to do with the stock market. They just only want to buy Bitcoin or something, or the other cryptocurrencies. And that's fine. Actually, that's not fine. It's not fine to only own cryptocurrency. I mean, the narrative has kind of got dulled down a little bit that the dollar's going to fail and Bitcoin's going to replace it. But as I talked about in my live stream and ranted about last week, Bitcoin is really backed up. It's got some serious constipation on its transactions. And that's a technical limitation. And yeah, there's Lightning Network that's going to fix it, but it's not suited to replace worldwide commerce. It's just not. Nor is it ever going to be. Why would they give up? Why would the federal banks, why would the national banks give up that power? Because it's better, because it empowers people. Yeah, that's what they're interested in. The same people that say that they're a shady cabal of lizard people that are out to enslave us all, that buy Bitcoin because of that narrative, you think that they're just going to give up that power just because something is better on the free market? Cognitive dissonance. All right, rant off. Plug Discord. I just look for opportunities there, share my opportunities in real time. Links below to all the social media. I stream this every week. Let me catch up to the chat now. All right. Jen just posted this in here. What's up? Ditching the dollar. U.S. dollar collapse exaggerate. I mean, of course. I mean, anything that bleeds, it leads. Yeah. So, I wonder what this means by U.S. junk bond and insider buying strength. One of the explanations that was told to me by a friend today. This is his theory, and this is kind of parlays into what I put in the thumbnail. You know, where's this recession? By the way, I loved that. In case you saw that thumbnail and you see that the guy has 3 lenses on his binoculars, and he's wearing a suit with a baseball cap, that was AI generated. I love the mistakes that it made, so that's why I used it. So his theory is that all that money we printed, we'll get back. We'll do a market recap. I'll tell you where Bitcoin's going here in just a second, but um, his theory is that all that money we printed a few years ago, it didn't just all go away, nor did it all get spent in the U.S. He thinks that a lot of this cash is slowly coming back into the country from overseas. Chinese investors, foreign investors buying American real estate. Another data point, anecdotal, but I confirmed with some friends. If you own property in the United States, your number gets put onto a list. Somehow they get it from your phone records, and I've started getting multiple cold calls this week, last week, of people just will buy your property as is, cash, which it went away for a while. We were a little worried about the housing prices. I've been even thinking that housing prices would go down, but perhaps, perhaps, the rumors of the impending housing collapse are also exaggerated. Is this my connection, or are a lot of people trying to bring up Federal Reserve data? Come on. Come on. Come on, computer. Yeah. So house prices go moon, and house prices start to kind of level out and pick up a little bit. That's not very much of a crash. I mean, normally you do see a little hockey stick crash, but yeah, that's interesting to watch. This is the Case-Shiller U.S. National Home Price Index. It was came up to a high in June of last year, 308, and it had a little bottom in January for 292, and it's a few months delayed, but there's February at 293. So it actually ticked up in February. We should have the March here. Hold on. March Case-Shiller. That's for 2022. Oh well, I'd be curious to think. All right, let's get back to the chat. All right, my voice is low today. Can you guys hear me pretty well? I just saw that. Testing. It looks like it's come through. Maybe I was kind of far away from the microphone when I was going my rant. All right, what's the best way to bet against AI? Interesting. I like your thinking. I like your thinking a lot. I like that you're a contrarian. I'm a contrarian, so I have a special place in my heart. AI being shorted, that's a very good question. Because your ideas here, I don't know what FNGD is. Let's look. FNGD. That's Microsector's FANG Index, leveraged ETF. Oof. I'm not a big fan of, this is a triple X negative leveraged ETN. I'm not a fan of the triple leveraging unless you're using them to hedge. I don't like them for speculation because they can hurt better than they can help. I mean, I've gone into this a little bit before, but what you have is risk asymmetry in these leveraged ETNs, where if something goes, just simple math, I'll just do it real quick. If something goes up 3%, like the normal index goes up 3%, then you get 9%, okay, because it's triple leveraged, right? Well, now you're sitting at, from 100, now you're sitting at 109, okay? And so the problem, though, is that when you have 109 times 0.09, you're going to actually be back below it again, because you're going to be subtracting more from it, almost a whole extra percent. So when something goes against you with one of these triple levers, it hurts you even more. So that's the problem. Like, excuse me, if it goes down, okay, if the index goes up 3%, you're getting 9. So you're getting 109. And then if it goes down 3%, then you're going to lose 9%. So you're going to be down to below 100 on the next move down. So, that kind of compounds, 1% to 3%, et cetera. And it just hurts you more than it helps. So I'm not sure if I want to use that as the vehicle or not. The others, I don't want to, let's talk about Palantir. So Palantir, I got some friends that really love this stock, and it has finally started to show some resurgence. I own it. I'm back holding it. I bought it at basically last year. I can tell by looking at the chart, instead of going back through my logs, when I did that. It was when it did this little maneuver here in April of 2022. So I bought it at about 1250. The reason I did that was because it looked at the time, actually it may have been 1094. It was at one of these 50% retracements here, because I remember it did a bottom after earnings and then it pulled back. So it was either, I'd have to go back and look and see. I'm not going to BS you with what it was, but it was either $11 or it was either at the 50% pullback at $12.26. Much rather be the $11. But that's when I decided to copy trade into this with my friends who had been buying it here, because it was the best thing ever. I don't know why. It does AI. Woo, big whoop. But you know what? We're back up to, we touched break even, and I'm going to hold on to it. How do you want to short AI? I get that you want to short the narrative, and that's smart. I like to short narratives as well. Like I said early on, I want to go against the banks are all going to fail narrative, because that's dumb. But shorting AI, I think you're better off actually trying to go long. And that's because eventually there are going to be some companies. See, every year has its theme. Back in 2018, pot stocks were big, and then blockchain was a big thing. EV in 2021 was the hot thing. So AI probably would have been the hot thing this year, if not for it being such a bearish year with the money printer turned off. And so the reason that companies that, in years past, I remember especially when blockchain was the thing, they would put a press release out saying their company is investing in blockchain, and their stock would go up double-digit percents the next day. So if this was a different market, companies could put in their earnings reports, their press releases, AI or machine learning, and the algos and the day traders would pump that thing up. But that's just not the market condition we're in. So we kind of missed out on that this year. But I think in times to come, it's still a buzzword. It's still something people don't understand. They just know it's new and it could add value. Today I was, I just used AI to make my thumb image, and Shutterstock. I'm not sure if they're a publicly traded company, but good on them. They sell stock images. Well, what are people not going to need anymore? They're not going to need stock images. I was talking to my tenants this week. They work in the film industry, and they were showing me how they were leveraging AI-generated photos to create storyboards, because they direct commercials and little small projects like that, commercials and music videos. And whereas before they would need someone to be an artist to create the storyboard or draw it, they just go through and they type in what they want it to look like and draw out that storyboard, and then they direct from their iPad. Very smart. There's someone's job out there that has been taken away by AI. We're not really sure what all it's going to be used for, AI, but it's going to be used for a lot of things. And so what I would look at to go long AI is some of these projects that are going to make use of it. Jen, can you remember that company that Yikuz said that he missed. It was that it was the company that did Cliff Notes for things. It was down like 40%. Like basically, their whole model has been replaced by AI, and their stock dropped. Hold on, let me see. Stock drops on AI. Chegg. Yeah. So this was so it it's one of these things. In hindsight, it was obvious. They were already doing pretty well. Yeah, it was Chegg, but I think in their most recent earnings in at the beginning of May, Chegg, which is a let's see what does Chegg actually do? They are a company that I think they make. Hold on, Chegg company. I think they do Cliff Notes. They do a smarter way to student. It's the leading student-first connected platform. Basically, they do Cliff Notes. They basically take written works and then produce summaries. Well, that is 100% what AI can do excellently. And so their entire business model is basically gone. And so if you're going to short AI, I mean, here's an opportunity. I know we're getting to it late, but this was, in hindsight, the thing to short. So what I would actually do I wouldn't bet against AI. I would try to bet against companies where AI is going to be disruptive. And so that would be, I think, the play, actually. AI, and you think AI today is crypto from 2 years ago and .com. Well, it's a theme for this year. I don't think it's fully played out yet. I don't think. And here's the other thing. You know, one of the companies we've been looking at in this live stream for the last couple was AI. Literally, it's C3 AI, and other companies like Nvidia and things like that. Like you wanted to short, but you got to remember that Nvidia is more than just AI. They just make really good computer hardware that people want to buy to do the processing of AI, which people are using it, as well as for playing really fast video games. So I don't think I would really want to short Nvidia just based on that, because they're still selling products that people want. So if they stop selling as much because people don't use AI, maybe so. But I think people are going to keep trying to find uses for AI. I mean, we just seeing kind of the opening phases of it. I mean, AI is basically just like a calculator. My girlfriend, she uses it now for, well, no, I shouldn't rat her out. Some people use it for producing, written works. But you know what? If you submit it, there's a lot of limitations with AI. It uses a lot of the same adjectives. What you have to do is you have to go through and generate several iterations of AI generated content. Like I was showing Jen to start this video. But yeah, exactly. I went through several iterations before I finally got. Hold on, let's just see. So like I was saying with Shutterstock, Shutterstock is actually publicly traded. Hold on. Shutterstock. Well, I think they had the same effect as that Chegg, actually, because it happened around the same time, the same date exactly. So basically, here's another company that you could have also bet against this year. For some reason, in January they had a really good year, but man, that's a big drop on Shutterstock in the last couple. That's a 22%. Oh, it's a big move. It's a big old move. But to their credit, what they've actually done is see. No, I did it here earlier. Hold on. AI generated images, Shutterstock. And it actually was one of the top things that came up when I did it. And so, all right. 1 second. Let me pull this up. Person trading with lots of monitors. I need to give me 1 second. Just got to log into it. Hold on. Okay. Boom. All right. So I put in person trading with lots of monitors. And it comes up with a few of these things which are not really useful, but we can go through here and redo it. And there's lots of things out there. All of them want money now, so I don't blame them for trying to get paid. I did the kind of the hack way. I just copy and pasted it from my screen. But if you need a really high quality image, you can pay them. Yeah, so again, you'd have to play with it a little bit, but it's useful. I mean, I basically saved myself trying to come up with an idea for a thumbnail this week. I'm not gonna knock. I'm not gonna knock AI. I'm not gonna bet against it right now. Okay, cool. All right, let's go back through them. I've got a lot of chat backlog. Palantir posted better than expected results for the first quarter, while inching up its guidance for 2023. Big purchase by Kathy Wood's ARK. Good for a swing trade? Well, for swing trading it, for trading it, all right, let's see. So if I'm looking for trading levels, I'm going to be looking for probably it to come up to, and this also happens to be a nice little level here. If this trend is going to go, it's probably going to go up to about 17. It's not out of the Ichimoku cloud yet. So at some point, either here at 17 or in the meantime, it may actually top out. It did a good thing this week of breaking this high and actually closing the week just barely above it. Just barely closed above it yesterday, Thursday. That key level 1162, which was the high, pre-earnings high of last August. So you actually had yesterday close above it, and then today had a little volatility, but still closed higher above that level. So the key level here is going to be that 1162, and so far it's confirmed the breakout. So I have no reason to short Palantir yet or sell my shares. So as far as the swing trade goes, I would have liked for you to get into it before this because the risk reward is now a little bit less because basically you've got from here to here. But I mean, there could be some good trading opportunities in there. Yeah. Hey, Norok, are you going to talk about gold? Yeah. I definitely want to talk about gold. This has been the theme. In fact, well, there's my screenshot that I did for an idea from earlier this week. Because we talked about it in every live stream. Basically, gold, it's come to a multi-year, back to August of 2020 high on the monthly. Boom, boom, boom. You know, all the gold bugs were very excited about this rally, but it has potentially topped out. I say potentially to, be fair and, objective, but I'm playing it short from this spike that it did 2 weeks ago, Thursday, May the 23rd, and into Friday, May the 5th. Let me clean this up a little bit. I got too many lines. So what basically happened, let's hide that. What basically happened on Thursday of May the 4th, be with you, price came up to a high that it made in August of 2020, that it made in March of 2022, and then on the daily time frame, the following day, closed back inside this range. Now that's what I call a spike. See that? That's that little wick right there. That's a spike up to resistance, and then you have it close back inside it. That, to me, is a sign of a potential reversal because everyone thought it was going one way, hit a major level, and then could not follow through. People couldn't buy it up. People stopped buying. People started selling. So a lot of people, a lot of traders and investors that bought as it was coming up, thinking that it was breaking out, well, now where are they sitting? They are now sitting at a loss. And so what are they going to start doing? Getting a little bit nervous. And so what I try to play in these situations, whether it's down or up, try to play one of these false breakouts, something that doesn't follow through, is the potential reversal. And so as the time has come along, that next week came about, sold it as it pulled back into this range right here. And over the course of the week, we've seen it finally start to trickle down. I'm looking for gold to pull back to about the 1850 level. I think it's going to tank. I don't think it's going to do anything like that, but I'm playing the retrace. I'm playing the false breakout of the high. It's just that simple. It's just a technical setup. As far as what that means to the dollar, well, let's look at the dollar. Thanks for bringing these things up. We'll definitely. This helps me go through my my market recap. DXY. So this is interesting. So DXY, the key level is 102, and that is where price closed below it over the last few weeks, but now it's back above it, and it can do this. But the key level here is the 50% retracement from the low of 2021 to the high of September 2022, and that sets up at 102. So this is the level, the 50% support that it is now holding onto. Hasn't broken below it, but if you take out these lows of the last few months, basically of the year, January low and then the April low, at that point, now you're going to see some real dollar devaluation. But so far that hasn't happened. But you have that breakout set up to the downside. If we look with Ichimoku, it's setting up a nice wave pullback right here, where if you do have price go down from here or any point in the future, you're also going to get momentum down. And so that's going to show a full trend change on the weekly. And so now you can also cross-reference this with euro dollar, and that's also has its own resistance at the level here at 109. And so euro dollar is going to make up a lot of the dollar index, but also watch this. The key level on euro dollar is 109. And you can see also it's come back down below. It's held this resistance. Get a little bit of faking right there, but back down it comes. The next highest that makes up the dollar index is the dollar yen, and it never broke below its 127, 128 level. It's actually, well, the Bank of Japan has constantly been devaluing their currency for decades, and so nothing's different. So the dollar failure is, again, very much over-exaggerated, it seems. The price action has been a little concerning. Well, if you hold dollars, if you're like anyone that holds dollars, but if I look at the weekly now, at the close of this week, it has held this support. It has not broken through, in spite of the stock market going up. That's a win-win for Americans, pretty much. It is, actually. And it does kind of run contrary to that presumed correlation of U.S. dollar versus the stock market. But correlations, they're meant to be broken. So nothing right here shows me that the dollar is going down yet. We're still holding that support on the dollar. Almost like people want more dollars and more stocks. How does that happen? As my friend told me today, this is his theory, not mine. Foreign investment. People are not liking the way that the rest of the world is going, and even though I think that his theory was kind of convoluted. He thinks that foreign investors are buying real estate because they don't want to hold dollars. They want to hold U.S. assets, though, because real estate in the United States has got 13 aircraft carrier battle groups to protect it. There's a very low chance that we're a country that's a rule of law, property rights. It's not bad. It's not it's a lot better to have property in the United States where you have reasons in courts to protect it, as opposed to in some other country where it can be nationalized. Yeah. Freedom. Well, I need the freedom intensifies, and I also need a GIF. That way I can paste it in here. Anyway, all right. Keep on going down the list here. Like I said, I got to cut at 5 o'clock because I got some meat on the smoker. Freedom intensifies. I wish I could put these in, hold on. Yeah. Freedom intensifies. All right. So, crypto market cap is easy to measure directly. AI, not so much. Easy to derive by looking at the big 8 market cap explosion. There's about a 1.5 trillion AI market cap that went to Microsoft. That's, yeah, just by hand waving about AI. That's true, but you got to remember, like, these are not, upstart companies that are trying to pump their stock like themes of the past. These are companies that, produce goods and services. Man, I love that. I love that level. And this is late, of course, that Microsoft came to last year in October. Yeah, people have been asking about Microsoft. It's coming up to the high. It's no change. Pretty much. I think this week of last April, and then people were asking me about Microsoft. They're like, what is it? Well, it's bullish. It's going up. You had another bullish week on Microsoft there. Tesla was a good short at 400, good long at 100. Now a good. Okay, so I mean, yeah, it is a good thing at those levels, but opportunity was not readily apparent. So now that you're talking about Tesla, let's talk about Tesla. So, quick recap of the methods that I use and why I've been posting on my Discord and on TradingView about Tesla for this last year. It's been ripe with opportunity. And it's very simple. Very, very simple. So, I pretty much do this every week. Talk about Tesla as an example because it is a textbook case for why 50% retracements work. All right, so where was a good short at 400, where everyone thought it was the best thing since sliced bread and no one was shorting it, that was the all-time high. By the way, that split adjusted, so it was probably, I think, like 800. But that sets up from the low of 2019 to the all-time high, a 50% retracement level at about 213. As we go into 2022, the money printer gets cut off. EV is not necessarily going to take over in the near future, despite what people said in 2021. It pulls back to that level, 213, holds the level, tries to make a run for the high, but fails. Breaks the level, you should be out of the stock because now it's going to go into free fall into what I call the valley of risk. But if you hodled, it did come back to this 213 level. So the level that it came to before and the level that it broke is now the level that it's coming to as resistance. So support gets turned into resistance. Furthermore, this leg down from September of 2022, the big value of risk move down to the low in January, that also is a 50% retracement as a resistance in itself. You have two major levels coming together. You gotta short it. And I had a lot of spirited discussions about this with people in Discord about, well, yeah, but Kathy's saying it's going to go to 1,800 now. No. So you short it, and where do you short it to? You short it down to, you guessed it, the next 50% level, which was about 160. Now, is everything going to be perfect and go there immediately? No. But that was the level that bought it, and there's your level to catch this rally this year in Tesla. This is how you catch a bottom. You don't catch a bottom by coming in, by buying this. You catch a bottom when it starts to show you some signs, maybe. Take a little bit of risk there. You don't want to do that? That's fine. Don't buy it here, but then wait for it to pull back to a support when everyone else is pissed off that bought it here. And now you can feel smart about your investment because you're not buying it at the price where people finally started looking at it. You waited patiently. You chanced missing it. You resisted the FOMO, and you look for a buy. So 160 was a very good level to buy it. If you didn't buy it, well, you weren't reading Discord and TradingView. All right. Fundamentals are against gold. Inflation rolling over raises real rates is kryptonite for gold. That's a good explanation, actually. But again, I'm just looking at the price action. If I wait to come up with a reason, then I may miss the move. Schwab. So without looking at it, without remembering what the price is, it's probably malign. It's probably mispriced based on the FUD. So let's take a look at it. Well, you've got a bottom that's set up, and it does look like most banks this week, which are starting to recover. So I think that the theme of this year has been banks go bad, and you have to reject that theme as an investor. If you're looking for a really good opportunity, you need to go against what everyone is saying and thinking, what everyone's in the news. And I think that FUD is finally starting to abate. So I don't own any Schwab. This is not the way that I decided to go with the banks. That was Truist, TFC. That's the way I tried to go with it because it has a very good dividend yield, 7% or more when I bought it. But let's see. I mean, Schwab as a financial services company, it's good stuff. I'm not really. Their dividends only even at this price, 1.93. Is it a growth company then? This would not be my pick. This would not be my pick. If you want to play counter to the narrative of banking failing, that can be the play. But as far as, the reason I bought Truist, TFC, and just kind of held on to it in a long-term stock portfolio was to generate that dividend yield, to get it at a discount for that. And it's just not as Schwab is not as attractive to me. All right. Let's see. Jeremy, what is KeyBank? Do you have the symbol for that? Lulz. Yeah. I'll think about getting that Tesla. I wish I could respond to that message. All right. Okay, let's see. So all right, I like these questions. Hey there, peaceful antelope. Peaceful. Namaste. Any tiles to cut over trading? You mean tactics? I am trading for 4 months, and I still take 6 to 10 trades every day without success, unfortunately. Tips. Okay. So are you doing a practice account or real account? Doesn't matter which one you're doing. If you've just started out and you're taking lots of trades, good. You've actually, believe it or not, through this pain of realizing that you're overtrading, you've actually taken your first step. You've realized that there is a such thing as trading too much. And a lot of new traders don't understand that. They think that they're just going to sit there and play the game, spin the wheel, click, 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 like they're playing Diablo or League of Legends, and they're going to make money. And you've just realized that that is not how to do it. So congratulations. You have taken a step in the right direction of becoming a trader. Now what you need to focus on is looking back at those 8 to 10 trades, 6 to 10 trades you're taking a day, and look at the ones that worked. Because if you're taking 6 to 10 trades a day, even if you're losing money, something won. At least one of them. I would be very surprised if that wasn't the case. In fact, if every trade you do is wrong, you've got a very simple solution. Do the exact opposite. That'll solve your problem there. But if some are winners, some are losers, focus on your winners. Take a look at your winners. See what sets them apart. What did you do correctly? What did the market do correctly? Why did you buy that? Are you writing down why you take these trades? Or are you just like, boop, it looks like it's going up, boop. Okay, that's fine. If you want to trade intuitively, it can be done. But you need to sit down and do a little bit of critical analysis about what you're doing to learn. Think of yourself, to use the AI phrase, because AI is based on our brains. You need to take this as a data set and then train yourself what works and what doesn't. This would have been an excellent time to use my soundboard. Was it? Yeah. Okay, I don't know if I want to use these all that. All right. But no, you're actually in a good position. You've learned there is a such thing as overtrading, and there's actually nothing wrong with you in the beginning. It's just like anything in life, try and fail. You're trying it. You're staying consistent. You're actually doing right. Now, if you're actually losing money, well, that's another lesson for you. Maybe you need to size down a little bit. You know, if you got into trading thinking that you're going to make money in the first year, I'm glad you came here so I can tell you that you're not. You're just not. You may have started trading in 2020. You may have started trading in 2021 where everyone was a genius because market go up. But this is a very difficult market to try to day trade. I have pretty much checked out of day trading. I look every day for opportunity, but when I look at the 1 minute on the S&P 500, and uh, you're not going to trade this. This is gross. This is not what we've had in the past. This is a typical summer market, though. Bitcoin, I can't even trust the 30-minute chart because it looks like this. So part of it is you learning how to become a good trader, but part of it isn't you. Part of you is the current market we're in. It's just not trendy. Now, in that, what you can do is you can try to switch things up a little bit. Maybe add an RSI, maybe add some kind of a stochastic, an indicator that basically shows you highs and lows. Something simple like that, where when the RSI gets to a low level, do some research on RSIs and stochastics, because that's the kind of indicator that actually works pretty well in this kind of environment. One of the things I did, and I think I actually have an indicator that I did. Yeah, so this is my Bollinger Bands and stochastic RSI signal. What this did was actually combines, and I've used this a little bit, but I don't use this typically in my trading. I like to use my levels, and I'm a trend trader. I like to catch pullbacks and reversals and things like that. But if you go to take a look for that, again, just go to indicator searches. Do it for if you do a search for stochastic, just type in STOCH. You should see mine on the list right here with about 199 people that have used it. It's free. And what it does is basically it shows you when price gets outside of a Bollinger Band and also RSI is at an extreme. And this can potentially show you when there's going to be reversals. But you need to be careful about this because obviously you can see from this, there's a lot of false signals. But the reason I bring this up is because when you get into a market condition of choppiness, range-bound, auction theory, all that kind of stuff, auction zone, then you're basically having to play these highs and lows. The opposite is true when you're in a trend. So to recap, you're doing good. Keep at it. Pay attention to what works and recognize, this is me sharing experience here, that you're in a range-bound market no matter what you're trading. And you may need to use indicators that help you see overextensions, oversold, overbought conditions. Try that. Try that. All right, Casey, AutoCAD. Or is that Acadia Pharmaceuticals? I think Autodesk is AutoCAD, my bad. Price Go Moon. Oh, Casey. Hey, what's up, man? You're a breakout trader. I need to keep up with your breakout trades. Do you post your trades, Casey? I want to follow you. Post your trades so I can see your trades because you always come in here with some breakouts that I like. All right, so your trade is 24.50. Okay, so you're gonna play that breakout, and stop loss 22.46. Let's see if I like this. 22.46. Hang on. That ever happens is because you don't have your visibility set up on TradingView. And then a target, 2-to-1 ratio, 28. Means you're probably playing that high right there. Yep. Okay. I mean, I like this even further. I mean, honestly, like, is it? Oh, no, dude, you got to take this for more. I want more. So you've got this pretty obvious, leg down from the highs in December of 2020 on this, and you you have a pretty clear 50% level at 34.85 from this price action right here. Yeah, sure. Email them to me, or send me a message on TradingView. We'll talk on the chat there. I'll respond to that, or join Discord. Hop in the Discord. Because this is why I have my Discord. Is not to sell people and shill services and things like that. Even though I give my spike alerts on the Discord for free because I use them, it's to have people give me ideas. I can't look at everything, but I like this. I like it because, like I said, you can go for more on this. And you may also want to give yourself more of a buffer. But if you want to keep it tight with risk, that's fine. But I like that based upon the Ichimoku trend, that you have a pretty full-on trend change. You're breaking out of this level right here. Yes, the first bits of resistance are definitely going to be the top of this range, this past auction range right here. That's going to be your first resistance. But if you're buying this as a stock, then if I'm buying this as a stock, you can do what you want. But if I'm buying this as a stock, I want this thing to come up to at least a 50% retracement of the leg down. At least. And then even keep some for more. So I like this breakout. I like this breakout a lot. I do. I like your breakouts. This is like the second or third one that you brought to me that I really like. Create alert. Breakout from Mr. Casey Lewis. We'll see if it triggers next week. Me likey. All right. Thanks for your advice. Appreciate it. I like reversals, even though I cannot find the best situations, and I'm using like the ends. Like anything, whenever you first start doing something, you're gonna suck. Peaceful. It's practice and finding your own way. So keep at it. Microsoft also doing a breakout. Well, the problem with Microsoft taking a breakout here is if you're not already in this, you know where your targets are going to be. You can play it up to that point, but at some point this thing's going to do a little pullback. And I like the company Microsoft. I like it to hold, but I like your opportunity better because you're catching it from a bottom. This one, you can pull back at any time, basically. Any good books you recommend for learning price action for the beginner? Well, I am unfortunately illiterate. No, and I don't really read books. Although I will say this. Of the books that I have read, they have been about trading. That's not true. I also read Game of Thrones and the Sword of Truth series and a few other books along the way, sci-fi, fantasy stuff. But trading books, the two books that I would have to say would be the most influential and the best if I was going to direct to someone is Trading in the Zone by Mark Douglas. And the TLDR of this book is essentially anything can happen. It basically, every chapter is based upon getting out of your head this really dangerous notion that I bought this and it has to go up, which is very dangerous because that makes people stay in trades too long. And so it really just teaches you a little bit of humility about the market. So very good there. And then the other one is Reminiscences, I'm going to spell that right, of a Stock Operator, which is coming up on being 100 years old. But if you start reading this book, and it's very interesting because the way it's told, I actually recommend getting because I'm kind of this one. Get this edition right here with annotations because it has like a lot of cool little historical facts in the margins. So it's 100 years old. Get it in a hardcover and keep it in your collection. I've given this away as gifts. But when you start reading this, you're going to realize that people have not changed in 100 years. You're going to hear people talking about the rampant speculation of the railroads. You know, that newfangled thing that everyone was so bullish on, and how it all collapsed, and other little things. You're gonna hear the same words from the crypto bros of the last few years 100 years ago about stocks. The same. If you transplanted the quotes in this book from 100 years ago about the stock market to today, you couldn't tell the difference. The only thing that's changed is the asset type. Very good fun reading. Very good fun reading. It's a lot of fun to, if you like trading, get this book. This fun. But the Trading in the Zone is probably the best psychological book for you to read. As far as price action goes, I don't have a book for you, because what I've done is I've learned from people, specifically Ichimoku. And gosh, Jen, keep bugging me to make my own book. I get actually on a regular basis, week to week, I get someone send me a private message asking me if I've compiled my teachings, as they were, into a format. And the answer is not yet. But that's something that once I motivate myself to do it, I will. The problem is you can't pay me to do it. I know a lot of people like to get paid, but I just enjoy talking to people and sharing for free. But perhaps, if you send me a private message and get me to talking about it, I'll answer all your questions. I will. I don't mind spending time on people. I just don't want people's money. That's all. All right. So, yeah, TLT. So this was my trade of the year, because I am so damn smart and I get everything right. I only pick winners. No. What I think is going on with TLT, you know what? Let's leave that up there. That's what I thought I was going to do. I'll be honest. It's come back to basically the point that I bought it back in January. So the concern is that interest rates are going to continue to rise, and that's why TLT is going down. It's just that simple. They're pricing in higher rates because the economy is not bad. Everyone assumed, even my mortgage broker last year, that we're going to hit a recession and the Fed is going to be forced to lower rates. If rates went down, then that means that bond yields go down, and that means that bond prices would go up. Inverse, yields, bond prices. That hasn't happened. In fact, now there's buzz about the Fed continuing to raise through this year, and who knows? So that's what's happening. I can't change that. I'm still in this position from a technical level from about 101, where you see it on the chart here, where they stop below the low of last November. So one of those things is going to happen, but I didn't play with options. And in fact, I made it very clear for people not to try to do a TLT play with options. And you can do it if you want to, but this trade may take a while, like a lot of things. And if you've bought any options, you know that theta time is your enemy. So if you want to play this, go way out. But for me, I bought TLT shares, and we're just going to sit on it. I can't change it, but that's where it stands right now. All right. Well, I'm going to start wrapping up. Okay, so Kalishna Kumar. So the spike indicator is something that you need to hop over on TradingView. And, well, you know, I'll do this. So you can find my name from here, but I'll post it. The spike indicator is invite only, and the only thing you have to do is pay a small fee of sending me a private message on TradingView, and I'll give you access to it. But that is the spikes that I use. So could TLT break below 92? As I just recommended to that person about good books, the Trading in the Zone would tell you that TLT can do anything. TLT could go to zero. So could it do it? Yes. Do I want it to do it? No. But if it does it, will I still be in it? Yes, because it has not broken that low. The key thing is that low that it made last year. All right, I got to go check on my food. Thanks for joining me all. Thanks for your questions. Thanks for your symbols. I do this every Friday at 4 p.m. Love to have you guys. Love to have you in the discussion. Give me stuff to talk about. Love to help people. So thanks again, guys, for checking in. Links below. Hop into the Discord, join the conversation, share ideas like our good friend Casey right here, and we'll see you next week. Have a good weekend and trade wisely.